I got a referral, which I have not closed yet, but I want to go over the conversation that I had. I got a referral for life insurance, and it was not an appointment, it was a phone conversation. And I just want to go through what I talked about, right? So this guy, one of my clients referred me to this guy, and he said, look, I'm looking for life insurance. And I said, okay, why are you looking, blah, 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 right? What do you have right now? So he said, well, right now I have a $500,000 policy from my job. So I'm looking for another $500,000 policy term. And my friend said, you're his agent. So he is looking for. So I'm looking for something similar. So what this set up is me having a conversation with him about why I don't like group. Okay. And so what I started to go through all the different points. Now, again, we're not on Zoom, so I'm not going through a presentation. We have a great way to do it on the PowerPoint. But over the phone, it was just a conversation. So number one, and let me tell you a little bit about him, right? He probably makes 180,000 at his job. His wife makes 120. These are intelligent people. They make money. Okay. And the first thing that I said is I said, look, the problem with group is that it's not portable, which means that you can't take it with you. Now I'm going to show you a group insurance policy. I'm going to go through the specifics with you, but you can say that. Okay. Are there stipulations? I'll go through that with you, but you can confidently say that this is the case. It is not portable. I said, have you ever changed jobs before? He said, yeah. I said, what if you start your own business? What's going to happen to this policy? And he said, yeah, it'll probably end, but the types of companies that I work for, and this is how people start to posture themselves against you, right? The types of companies that I work for, I'll make sure that they have that benefit. And I said, bro, I've been doing this a long time. Very rarely have I ever heard someone say that in the interview, that was one of the stipulations they had. If they're giving you a raise, if they're giving you a better schedule, you can, instead of going to the office, work from home, no one's tripping on the life insurance benefit. Man, there's nothing you can do about that either. People try to act like, no, I'll make sure. No, you won't. There's 100 things on the list you as an employee are going to look for in a new job than that. Okay. But I said it in a very nice way. I was like, look, I have a lot of clients that work for Fortune 500 companies, and not all of them offer this benefit. So what's he saying in his mind? If I go from company A, which is a big company, to company B, I'm not worried that I couldn't take my life insurance because company B will also have life insurance. And this is true. There's a lot of big companies out there, even if they have group life insurance, it's very limited. You can have 1 times your income, you can have 2 times your income. Even if you are making $180,000 a year, your policy will be very low cost, 180 to 360. There are kids in this room that have more life insurance coverage than that. People making that kind of money need $1 million plus. Okay. Now, to his credit, he wants more coverage because his current job right now will only allow him to have 500,000. And he kept fighting me on this. He's like, look, I will buy. I only want to buy the difference. And I said, listen, there's too many things that we have seen in the insurance industry where I can let you think that that's real insurance. It is not real insurance. We don't consider it in a financial plan. That is something you have to say to your clients. As insurance advisors, we do not include group insurance as part of the financial plan. Let me tell you why. There's a high probability that you are going to leave your job for some reason or another, either by choice or not, if you're ballsy enough to say that, okay? And then, number 2 is that I am worried about it paying out if you get a long-term illness. And he said, what do you mean? I said, I mean, which story do you want? I had a client whose husband worked for Arlington County Police Department. I've been saying this one for 15 years. And he got lung cancer. He was on bed rest for 6 months. And eventually he got laid off. When he got laid off, he passed away soon after. The wife went to the county and she said, where's our money? And they said, when he passed away, he was actually outside of employment. So they didn't have to pay. Not all death is sudden. If you get a long-term illness, there's only so long that your company is going to keep you on the payroll. By the way, another wrinkle to that story that I forget to say sometimes is the wife told me that he was 19 years in. If he had been 20, he would have been a retired full benefit. She would have gotten everything. But because he was 19, that was like a stipulation where they didn't have to pay or give the normal benefits to someone who had been there long enough, right? But not all death is sudden. Now, the comeback that a lot of people have is, oh, well, my company has disability, right? So the thing about disability is it's a good benefit. If something happens, that disability is going to continue to send you a paycheck, right? But when disability is on, if you read the contract, the life insurance is turned off. They are not going to, some people have disabilities for 4 months. They're not going to pay you disability for 4 months. And then when you pass away, then pay you the death benefit. They're not going to do that. They don't run parallel to each other. If you die within a certain period of time, right, they'll pay the life insurance, but they're not going to pay extended disability and then pay life insurance. One time when I was, I used to call resumes all the time. Some of you guys still do. And I would have all kinds of people that would come in for interviews. And one time I interviewed this woman and she was super sharp. I was just a kid. And she came in and I said, I'm just curious, you were the director at Freddie Mac. I mean, that's a big job. Why are you looking? And she said, I abruptly quit my job just because I didn't want to work for that company anymore. And I said, why? And she said, I had a very good friend that was a coworker of mine and he passed away. And I was also friends with his wife. And his family was struggling and the wife didn't know what to do. So I was helping her kind of broker this arrangement with Freddie Mac so they would pay her the life insurance. And for whatever reason, they didn't pay. And I saw how much that family struggled. And I just couldn't work for this company anymore. Now, I didn't ask her the details and why they didn't pay and all that stuff. But this is the thing about group life insurance is that the reason we get insurance is for the what ifs. This is something I always say to clients. We get it for all the different what ifs. What if I get sick? What if I die? What if this happens? What if that happens? And group insurance just doesn't cover enough of the what ifs. There's still some holes in your game. And when I told this guy, I said, dude, for you, I mean, the difference here is $100, $200. I mean, why are we arguing about this? This is not cost prohibitive. At your income, what does it matter if you get 500 or $1 million? Okay, so I want to show you this policy here from, if you work for Amazon, is that a big company? Yes, right? So let's read what they have here. Okay, so one of my clients that worked for Amazon, he sent me the group insurance policy. Let's take a look at it. So now we're going to get a little technical in terms of what it says. So the lesser of 3 times your annual salary or 500,000. Okay, so the max they're going to give you is 500,000. If you make 100, they'll give you 300. Now let's go next. All right, so let's look at how this works. Portability, right here, Sheila. It's written right here. If you are under age 70 and you leave your employer due to any reason other than disability, you may continue your current level of supplemental. The free part doesn't go. If you purchase from your employer and their insurance company the additional portion, which is just like going out and buying term insurance. That part is portable. Well, let's read about it. But you will have to pay us directly. If you continue your supplemental term life coverage, you may also port your spouse, kids, whatever, to a maximum of $150,000. Portable coverage reduces to 65% at age 65 and terminates at age 70. Our policies go to 80. So even if you were able to convert, it's going to reduce and then stop. Okay? But here it says premiums may be higher than those paid by active employees. So even if someone has a portable benefit at their job, guess what? The terms are no longer favorable to you. And then right here it says the basic life insurance is not portable, but it may be converted to an individual life insurance policy. So I'll tell you online what it says about that. When your group life insurance terminates or the amount of coverage you have is reduced, you can convert your coverage to an individual whole life, or you may purchase a single premium convertible 1-year term. Okay. So all these people out there that think that they have great insurance from their job, you cannot take it with you. If you can, in the small instances that you can, a big company like Amazon, they have some ways that you can do it. The terms are no longer favorable to you when you leave the group. When you're in the group, that's why I call it group insurance. You have group insurance. When you leave the group, the terms are not favorable, right? That's why we need a private policy separate from our job. That's not contingent upon our employer. Now, people say, well, then why wouldn't you just buy the supplemental? Let's take a look. Right here. Okay. Well, what's happening to the cost? Going up over time. So if I buy the supplemental from my job, sometimes you have to prove insurability. Just like with us, you have to do a medical exam. And regardless of if you don't have to do a medical exam, it's a cost that goes up over time. Our cost is level. So if you're going to buy additional supplemental insurance, why not do it privately with a level cost versus a cost going up? Okay, so I want to just go through that really quick. It's a good time to end the meeting. I thought that you guys got a lot of great information, but like I said, before I came up here, this thing is just about effort. It's not about how good you are. It's about how much effort you put in. And the more effort you put in, although that the efficiency isn't there, it's going to get there. Because a person that's going through 100 of anything naturally is going to get better. The efficiency catches up when you maximize the effort. Okay, team on 3. 1, 2, 3.